know that there had been an agreement, a deal in place with the SEC. So when you see a tweet like that and then the subsequent reaction in the stock price, was it material?
Look, I can't comment on legal issues here, but it certainly wasn't smart. And let's take this from the top. In general, Elon's done something smart with the tweeting. He is communicating directly with the user base. He's getting them excited about new products. He's talking about the future of the industry. And that is part of the allure and the mystique of Tesla that the auto companies just don't do. But when Elon talks about building great vehicles, he's terrific. When he verges off into his personal life or makes political statements or, for God's sakes, talks about the share price, that is a place he should not be.
You're a former board member. You've been an investor in Tesla. Is the share price too high right now?
Well, look, I'm not sure Tesla shares are worth 700, much less, I think, 729 this morning. What I can say is he beat Q1 forecasts. He's profitable for the third quarter in the row. He's growing faster than just about any auto company in the world, and he's innovating faster than anyone. So right now, he's doing pretty darn well. He's setting the standard for how to run an auto company. However, competition's coming faster than ever. Volkswagen's putting a $25,000 car on the market next year with a terrific range, and it looks great. The Chinese are coming quickly. He's going to have to go faster than the others to keep his place on the top of the mantle. But Elon may be difficult to work for. He may be irascible. He may challenge the SEC and waver out of the middle of the fairway. But in terms of how to run an auto company, he's tough to beat.
Hey, Steve, I want to ask you again, not so much about the tweets themselves, but on what you think they mean for investors. So I think Tesla was trading at about $750 a share before Elon tweeted on Friday. Went down below $700 a share after the tweet, 686 or so. It's back close to $750 today. If nothing else, he's introducing a lot of volatility into the stock. So if you're an investor, you say that it's great that he tweets about the product. Do you only pay attention to those tweets? Do you have to factor in what he might do to the stock? Does it factor, how you can trade it? Do you just hold on to it and close your eyes? What?
Well, look, the Tesla share price was up to $780 on Friday. It dropped 80 points. That's $15 billion. So I think, the board needs to talk to him and say, look, talk about the company. Talk about the future. You understand this better than anyone. Leave your personal life out of it. Leave politics out of it. Did he lose $15 billion for the shareholders on Friday? Probably did. However, you got to hand him credit. He's got a loyal base. Shares back up to 739 today. And I think overall, if you look past the little daily bumps and look, he's expecting apparently his sixth child in the next few days. Is he a little stressed out? Maybe he is. Long term, the world's moving to electric vehicles. He's beaten everybody else to the punch. Long term, we're heading toward a cycle of autonomous vehicles. He appears to be ahead there too. You got to hand it to him. He is not your textbook CEO, but in a tough market where most people are down and his shares are up, you got to say he's doing something right.
Steve, does he listen to the board like a CEO that's perhaps more accountable to a board does? I mean, you would know that. You say the board should talk to him. Something tells me there are some board members who are probably talking to him, and he's tweeting what he wants anyway.
Look, I think you'd have to say that's an ongoing struggle. I stepped off the board a few years ago, and I'll leave that to the current board members. But I will say this to every corporate CEO, and I served on the board of CalPERS and CalSTRS, the first and second largest public pension funds in the United States. There's one person you don't want to be in a fight with, and that's the SEC. They've already been fined once. He shouldn't want that to happen again. I'm sure the board is pressing him now. Long term, I think Tesla is going to do well. The big fight will be against Volkswagen and the Chinese. It will be interesting to see. Tesla is continuing to bring new products to market, including the new long-haul semi-truck and also the new Roadster. So I think they've got some bright days ahead, but they're going to have to stay sharp to beat competition back. The Chinese are playing for keeps.
Steve, on that point, I wonder, that's sort of it's becoming a bit of a tired question, but if oil and gas remain irrationally cheap for several years. What kind of headwind is that on volume?
People have talked about that for years. Price of gas comes down $1. Everybody's going to stop going to electric. Absolutely not true. Again, Tesla sold more vehicles Q1 this year than last year. The entire world is going electric. And the simple reason for that is the cost of lithium-ion batteries has gone down 90% over the last 10 years, and it's continuing to go down. So that, combined with the fact that the CAFE standards, the miles per gallon equivalent of an electric vehicle like the Tesla Model 3 is 123 mile per gallon equivalent. There is no internal combustion engine that can match that. So expect the world to continue to go electric. The question is, who's going to win the battle to bring the first truly mass market car to market? And that means something in the 25K range. Volkswagen looks like they may be getting close to that. That'll be a battle to watch, and the Chinese are right behind.